Welcome to the deep dive. Today, we're plunging into something that's, well, it's everywhere. Artificial intelligence. It's reshaping tech, absolutely.
It really is. And you can't talk AI without talking Nvidia.
Exactly. They were kind of the first AI darling, you could say.
Yeah.
Their GPUs, their graphics processing units, they're the gold standard for running these complex AI models.
No question.
And their performance since, what, early 2023? It's been mind-blowing. Stock up over 1,100%.
And the revenue.
Revenue jumped 673%.
Yeah.
Net income, even crazier, up 1,770%. Just staggering numbers.
That kind of growth, though, it shines a massive spotlight on a real problem for the whole AI industry.
Which is?
Just unrelenting demand for those AI chips, the powerful ones. And, well, limited production capacity. It's created this ongoing GPU shortage.
Right, you hear about it all the time. Can't get enough chips.
Exactly. But that scarcity, it also created a really interesting opportunity.
And that brings us to CoreWeave. That's our focus for this deep dive.
Yep. They've stepped up to provide cloud-based AI resources, specifically for customers needing that GPU power.
So our mission today is to unpack CoreWeave, look at their unique spot in the market, their strategic partnerships, and their potential in this sort of specialized Neocloud area. We want to help you understand this corner of the tech world better.
It's evolving incredibly fast.
Okay, so let's unpack this AI impact a bit more. It's not just hype, is it?
Oh, not at all. It's transformative.
Yeah.
Across pretty much every sector you can think of.
Like healthcare, finance.
Yeah, drug discovery, financial analysis, automation, entertainment, logistics. AI is fundamentally changing how these industries operate. It's the engine under the hood for so much innovation now.
And NVIDIA's role in that engine is critical.
Absolutely foundational. Their GPUs aren't just fast chips. They're designed specifically for the massive parallel processing AI needs. They speed everything up.
Which explains those numbers you mentioned earlier, the huge growth.
It's exactly. Stock up over 1,100%, revenue 673%, net income 1,770% since early 23. That pushed their market cap to, what, 4.1 trillion?
4.1 trillion, just massive.
It shows how essential they've become, like the new oil, for the data economy. They're the building blocks.
Which circles us back to the bottleneck problem, this huge, unrelenting demand, meeting limited chip production, creates this persistent shortage. Everyone wants them, startups, big tech.
Right, and there just aren't enough to go around. It's a real structural issue.
Yeah.
But what's fascinating, and it may be a bit overlooked, is how that specific shortage created the perfect conditions for new specialized players.
How so? Sorry.
Well, when something essential is scarce, you get innovation around access and optimization. Traditional cloud providers, they're huge, but they do lots of things. They aren't always laser-focused purely on these super high-end GPU workloads.
Okay, I see.
So the scarcity didn't just let companies like CoreWeave survive. It kind of created the niche for them to thrive by focusing just on that problem.
So let's get into CoreWeave itself then. You called it a Neocloud provider. What exactly is a Neocloud? How's it different from, regular cloud computing like AWS or Azure?
Good question. Crucial distinction. So traditional cloud gives you online access to software, storage, general processing power, right? Been around ages.
Yeah.
The Neocloud is much more specialized. It really grew out of the AI boom. It's focused mainly on offering GPU as a service, GPUaaS and AI as a service, or AI.
Okay, so it's purpose-built for AI workloads.
Exactly. Think of it like the regular cloud is a giant supermarket with everything. The Neocloud is like a high-end specialty store just for the absolute best ingredients for one specific thing, in this case, AI development.
Got it. And CoreWeave is the big player in that specialty store space.
Yeah, they're widely seen as the largest, kind of the most dominant in that Neocloud group because they focus so intensely on it.
And a huge part of their dominance seems to be their connection to Nvidia is more than just buying chips from them, right?
Oh, much more. It's a really deep relationship, and it's getting deeper. Nvidia actually owns about 5% of CoreWeave.
5%? Wow.
Yeah, that's nearly 24.3 million shares, valued at over $2.86 billion.
Okay, that's significant.
It gets better. That stake is actually Nvidia's single largest equity holding. It represents something like 91% of their entire equity portfolio.
91%, just in CoreWeave.
At the end of Q2, yeah. It shows incredible confidence in CoreWeave's tech and their ability to deploy NVIDIA's latest GPUs effectively.
So NVIDIA sees them almost as a strategic partner, not just a customer.
Precisely. Like a specialized extension of their own strategy.
Right.
Especially for these really demanding AI jobs.
Mm-hmm.
And that partnership gives CoreWeave early access to NVIDIA's newest stuff.
Which is a massive competitive edge.
Huge. in a market driven by having the absolute latest hardware.
And here's where it gets really interesting, right? This relationship just got even deeper. There was a regulatory filing recently.
Yeah, September 9th, it details a new agreement, initially worth $6.3 billion.
6.3 billion, what's the deal?
Basically, CoreWeave will give Nvidia access to any of its unsold cloud capacity, its spare GPU power.
Okay.
And the kicker, like you said, is Nvidia commits to buying that unused capacity from CoreWeave all the way out to 2032.
7 years. They're guaranteeing demand for 7 years.
That's the deal. It's huge. Nvidia's logic, they say, is about supporting the ecosystem, especially startups and smaller companies. They mentioned the long lead times for building this stuff.
Right. Takes years to build data centers.
Exactly. A spokesperson said, quote, "To support startups and small to mid-sized companies, Nvidia and CoreWeave are proactively building data center infrastructure and provisioning data center capacity to meet evolving capital needs."
So what does that mean for CoreWeave, practically speaking?
Well, think about it. It gives their investors incredible assurance, a guaranteed multi-billion-dollar revenue stream locked in for 7 years.
That must de-risk their business massively.
Absolutely. It gives them huge stability in a really volatile, capital-heavy industry. They can keep building out their infrastructure knowing a big chunk of it is essentially pre-sold to their biggest partner.
Okay, so the NVIDIA relationship is obviously central, but CoreWeave isn't only tied to NVIDIA, are they? They have other partnerships too.
That's right. And it's important because it shows the demand isn't just from their main backer. They've significantly expanded their deal with OpenAI.
OpenAI, the ChatGPT folks.
Yep. They secured a new $4 billion deal with OpenAI. And that's on top of a previous $11.9 billion contract they already had.
Wow, so OpenAI is leaning heavily on them too.
It seems so. It shows massive ongoing demand for CoreWeave's specialized GPU capacity from another huge AI player. And CoreWeave keeps saying they're investing heavily to build out infrastructure to meet what they call unprecedented demand.
Okay, so these huge deals, NVIDIA backing the OpenAI contracts, how does this translate to their actual financial performance? Let's look at the numbers. Are they backing up this story?
Well, the Q2 results certainly suggest strong momentum. Revenue hit $1.21 billion. That's up 207% compared to the previous year, and it beat Wall Street estimates, which were closer to $1.08 billion. So growing fast and beating expectations.
207% year over year is pretty explosive growth.
It is. And another key number is their RPO remaining performance obligation. That's contracted future revenue not yet booked.
Right, the locked-in deals.
Exactly. Their RPO soared 86% year over year to $30.1 billion.
So 30 billion with a B.
$30.1 billion.
Yeah.
That shows just how much demand is locked in long term. Their CFO even said on the earnings call that demand continues to outstrip their supply.
Still can't build fast enough, even with all that investment.
Seems that way. And they're still technically losing money as they scale, but their loss per share improved quite a bit, by 63%, down to 60 cents, so showing better operational efficiency as they grow.
Okay, so pulling this all together, if you're watching AI, looking at the infrastructure, the opportunities, what does CoreWeave look like from an investment angle now?
Well, its stock has been quite the ride since the IPO back in late March.
I remember that. It shot up like crazy initially.
Yeah, it soared as much as 359% very quickly. Then, predictably perhaps, had a pretty big correction.
Right.
It's currently sitting about 35% off that peak, but still it's up 197% overall since the IPO, which is still a huge gain.
What caused the correction? Just valuation concerns?
Pretty much. There are definitely concerns about, how sustainable is this level of AI demand long term? Was the valuation getting way ahead of itself? And of course, the fact that they're still posting losses while investing so heavily.
Standard concerns for a high-growth tech company, I suppose.
Right. But now, with these big deals locked in, especially the Nvidia one, the valuation picture looks different.
How so?
It's trading around 13 times sales now. And the argument is that's much more reasonable than it was a few months back at the peak.
13 times sales. Still high, but maybe justifiable given the growth and the NVIDIA backing.
That's the argument. An attractive valuation, potentially, for a company growing this fast with such a powerful benefactor like NVIDIA guaranteeing revenue and, a long runway still ahead in this specialized market.
It gives them a level of certainty most startups could only dream of.
Exactly. That NVIDIA deal really de-risks things. So its current market cap, around $59 billion, maybe looks a bit more grounded now compared to those earlier, more speculative highs. The market seems to be factoring in more stability.
So, wrapping up our deep dive here, CoreWeave seems to have found this really crucial spot, right? At the intersection of massive AI demand and the need for specialized cloud power.
Definitely. And those key partnerships, Nvidia, OpenAI, they really validate that position. Plus, the financials, the RPO number especially, show the demand is real and locked in.
They seem pretty embedded in the AI ecosystem now.
Yeah. And if you connect this to the bigger picture, it highlights how vital these specialized providers, these neoclouds, are becoming. They're not just renting out servers. They're enabling the next wave of AI innovation by making these scarce, high-end resources accessible.
Without them, the bottleneck might be even worse.
Could be. They arguably help speed up the whole development cycle for AI across the board.
Okay, so that leaves us with a final thought for you, our listener, to chew on. Nvidia says this big CoreWeave deal is partly about helping startups and smaller companies get access to AI infrastructure. So how might CoreWeave, having all this guaranteed capacity, actually reshape the AI playing field?
Interesting question. Could it genuinely make advanced AI more accessible, leveling the field a bit? Or will it just create new kinds of competition, maybe putting more pressure on the traditional cloud giants to specialize more? Or risk getting bypassed for these critical AI workloads?
Something to think about. Does it democratize AI power or concentrate it in new ways? We'll leave you with that until our next deep dive.